A tokenized loan worth $20 million soured in a lending pool on decentralized lending platform Goldfinch after borrowers Stratos bets on a real estate tech company and digital asset investments has not performed as expected, pool manager Wobbler Labs said Saturday in a protocol governance forum post. The distressed pool made a 4-year loan of $20 million worth of stablecoins with an 11% annual interest rate to fintech credit fund Stratos in February 2022. Wobbler Labs was the underwriter. Now some $7 million of the funds are at risk of loss, Wobbler disclosed. Stratos allocated $5 million of the funds to Razy, a real estate tech firm focusing on apartment rentals in major US cities, which has now stopped paying and is expecting to write down the position to zero, the post said. Another $2 million of the funds dedicated to something it called POKT was allocated to digital asset investments, Wobbler Labs said it was not aware of at the time of the investment, according to this post. Stratos sold this position at a near full loss and added loan collateral to cover the shortfall. Wobbler Labs said it will backstop all losses to investor in the pool. The remaining $13 million was allocated to e-commerce marketplace management startup 3Codes, which is performing strongly, the post noted. The soured loan highlights the risk of tokenized real-world assets such as private credit, which has become one of the latest trends in a crypto industry hungry for something to get excited about as capital inflows dried up. It also brings under scrutiny the due diligence process performed on blockchain-based RWA lending protocols, especially after last year's string of defaulted loans to crypto trading firms.
Over the past quarter, cryptocurrency benchmark has declined 11%. However, Bitcoin, the largest cryptocurrency by market capitalization, has outperformed the broad benchmark by declining 10.9%, while Ether underperformed, posting a loss of 12.5% for the last 3 months. It's helpful to view these numbers in the context of their year-to-date performance, where Bitcoin has gained an impressive 64% and Ether has risen by 41%. This underscores the resilience of these cryptocurrencies as some of the top-performing assets in 2023. This quarterly outperformance of Bitcoin versus Ethereum is continuation of the trend we have seen throughout the year. Institutional demand for Bitcoin ETFs continues to support Bitcoin, while the continued regulatory pressure on alternative token drives the bifurcation in the crypto market between the established majors Bitcoin and Ethereum and other digital asset protocols and projects. Over Q3 of 2023, computing and DeFi sectors were relative outperformers, while smart contract platform, which contains Ether and culture of entertainment, were relative underperformers. See the chart below for the full sector performance breakdown for Q3 of 2023. News related to US regulation was a key driver of price movement this quarter, with SEC action featuring prominently in this. This followed regulatory enforcement action against Coinbase and Binance earlier in June. Meanwhile, regulatory filing for spot ETFs by some of the world's largest asset managers introduced a lot of price action ahead of potential approval dates. While July and August were relatively muted months for the market, September saw the outperformance of DeFi, digitization, and the computing sector of the back of the partial Ripple court case win earlier in the month and investors' enthusiasm for AI. Regulatory oversight and ETFs approval will allow investors to allocate a portion of their assets to Bitcoin as a store of value or an uncorrelated asset class.
During the market crash on Monday, cryptocurrency traders lost over $100 million as a result of liquidations, as the price of digital assets fell along with the Middle East conflicts rising. According to CoinGlass data, traders who had long positions bet that prices would rise had lost over $105 million as of the American afternoon. This was the day when the most extended liquidations in September 11th. The liquidations took place when cryptocurrency values fell as a result of the conflict between Israel and Hamas and the escalating unrest in the region, which weighed on risky assets and jarred investors. Bitcoin, the biggest digital asset, fell by more than 2% before rising back to $27,600. Ether dropped by roughly 5% at one point, and large-cap cryptocurrencies like Solana, Polygon's native token Matic, and Polkadot's DOT saw losses of 6% to 7%. Later, they made some progress. Liquidations happen when an exchange terminates a leveraged trading position as a result of the trader losing all of part of their initial investment or margin, either because they didn't meet the margin requirements or didn't have enough money to keep the position open. The majority of the losses were suffered by ETH derivative traders, as declining prices prompted $32.78 million of long positions to be liquidated over the course of the preceding day, according to CoinGlass. A $4.5 million ETH BUSD long order of the cryptocurrency exchange Binance was the highest since single liquidation order. That's it in today's special segment. For more such updates, follow 3.0TV or log on to our website www.3versetv.io or scan the QR code to know more.